Yes. Is it working? Hello? Come on. Hey, why is not working? Oof. Come on. Hey. Okay. Now it's working. How can I see it? How can I do? Give me a second. What is this? I don't need this. Oh, come on. What is this? I don't need this. Let me close few things. This is my drawing. I show you. Whoop. Why so small? See? It's Inkscape. Free software. Very nice. So you don't have to buy what is called Photoshop. No, I mean this is for vector drawing. So it's more about what's the other one? Adobe Illustrator, something like this, or Corel Draw maybe. So let me close. Oh, I have another one open. I wonder why my computer is getting slow. You see? These my Bitcoin stupid drawings. Anyway, I'll close this one too. I have a folder which yeah, I should have done this before, but anyway, too late now. This is what? Okay, so let's see some charts. I wanted to put on what is called Twitter. I have serious speech impediments. Let me copy the link for YouTube on Twitter. Join if you want. Oh, no, if you want. If you have any TA request or what? Any chat topic you wanna talk about, quarantine, company streaming. About okay. So we put some hashtag BTC. Okay. ETH. Crypto. Yeah, I want to do this because yesterday I had a very good call. Actually, it's like 2-3 days in a row. I have very good calls on stocks and crypto. What else? Hashtag crypto, hashtag stock market, maybe something like this. Stocks. Wow. SPX. Okay, should be okay. And then the link of the YouTube. Okay, and let me check if anyone is there. Is anyone there? Can I put this away? Pop up the pop-up chat. Very good. So I can keep it here and I can see. Yes. Or should I minimize this window and keep the chat beside me? Maybe. That's not a bad idea. How the hell? Oh, come on. Maybe I can do this and keep the chat in here. These I can. Oh no. If I do this, it goes full screen. I'm not a geek, you know. I should be more expert on these kind of things, but anyway. Yeah. Okie dokie. I think I'm ready. Let's see if someone online. One watching. Yeah, I know I'm not very famous. I have only, how many? Less than 500 followers. And yeah, I just started with this YouTube technology and stuff. I'm not an expert video maker. Anyway, if you're there, write something. If you don't want to write, I'll just start some TA and rambling around and whatever. So I will start actually with Dow Jones. What is this? It's the US 30, which is the Dow 30. I had a very good call. Let me show you. I want to show you what was my tweet from yesterday, I think, or this is early morning. Depends, you know, where you are. And happy quarantine to everyone, by the way. Oh yeah, this one. I'll show you. Boom. This is my Twitter. And this is the call I made. I'm forecasting two possible different corrections. Of course, there are more opportunities than these two. But this is like the contrarian view, you know. Everyone is so bearish, everyone's saying it's going down, 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 down. What I said yesterday, I'm entering here in case this kind of correction is information. And you see, I entered. You can't see because it's the bid line. Yeah, but it's in average. I entered 2-3 times in this small point. You see these 2-3 lines overlapping. The average, I think it was 23,315. And here we are talking about the US 30. So we are not talking about the other Dow Jones, which have different values. And I said, okay, if I'm right and I buy here, boom, this is what I will write. Or at least to the 60, 61, 65, you see, where you can take, let's say, 30% profit and see if you have a correction, which type of correction, and reevaluate later. Or if you're wrong, you can simply go out because you see this trend line will be broken by the price. So it's a very minimal risk to reward ratio, you know. It's like how much? Maybe, I mean, the way I do trading, it's like I enter in the 1-3 minutes time frame. So for me, it's normally 30 to 1 at least. Never less than 10 to 1, just to be conservative. So this is one, what is the other one? This is one type of a correction. Yeah, these are my bullshit, you know, like duck and yeah, this is the same one. Yeah, so you see, this is one. So basically we are in the channel. The channel is sustaining the price since yesterday, and if you saw today, we went up, in fact. We are almost, now you cannot see here, I will show you in the bigger chart. We are almost passing this previous high. We reached the previous high. We didn't cross it yet. My other option was this one, you see. So what I'm trying to say is, like, honestly, it's not really important to be right or wrong, as many people think. The most important is to have a plan, because you see, I can lose 10 trades, losing, I don't know, not even 1% or 0.2, 0.1, 0.3%. But when I get the right one, because normally it's like 30 to 1 or even more, you know, then who cares? These are my memes that I showed you before. Oh, this was Ethereum. Look at nice code. It was here, everybody was shorting. And then I said a little retracement, and then we go up. And that's what happened. Now I have to just justify why I think that it's possible to have these two type of correction, which means a very deep correction in, you see, to the previous local high. I don't know how you pivot point, you can call it, which is around 2,650, 680, or this one that I'm playing now, that maybe he will bring us as a double top. Then I imagine anyway at least a small retracement, if not a big one, if not a collapse to the downside. I don't know, I don't care what will happen, we'll see. So the justification, let me put back my Twitter page. The justification is, in which way I can show you. Okay. Should I increase the page? So yeah, I put the chat in the other window because it will disturb you. Justification. Now, first move up. I have to enlarge because then you don't see a shit. What I can see is 1, 2, some kind of ugly 3, 4, 5. You can argue it's a 5 wave, or in the other way around, I mean still a 5 wave, but like this 1, 2, 3, 4, and ending diagonal 1, 2, 3, 4, 5. You see? So it's either 1, 2, 3, 4, 5, W, X, Y, X, Z, whatever. Still it's a 5, it's a structure divided in 5. After this you have your nice correction. I mean, it's not really nice actually, because look at this. Slope, slope. And then you start grinding and boom, outside, not outside, upside again. And again, look what you have here, something starting in 3. It doesn't have to start always in 5 because this market is crappy. But still you have 1, 2, 3, and then you see your 5 should end here. And then what you have? Another 2. So something is wrong. I mean, not something is wrong in the market, something is wrong in the way I'm counting it. So, this is what the US 30. So what I was thinking is, what if these 5, you see this small one, 1, 2, 3, 4, 5, this is related to this one, and then it's building something to go up again. And in the way that I show you on Twitter, in the forecast, something like this, you see, this would be like another 3 wave structure, or a complex anyway, a complex wave structure, and then you might have a channel formation like these somewhere. I don't remember where did I put it. Oh, here. Which I don't like, unless we still didn't touch the upper line, and the channel will be this one, you see, crushing the golden zone, finding support again to the golden zone, maybe going back to the channel, something like this. And this is because, why did I think about this? First of all, because I think the market like complex correction, especially after a big move, and you know we had a huge move, like 40% or something. Let me see how much it was, at least in the Dow 30. It was 37, 38%. So after this move, I don't think that correction should be so shallow. I mean, everything can be. And then let's take Fibonacci from here. I showed this maybe in the other video before. Look where we go to the 786, not even the 100%. Now, I think if I remember correctly in the S&P, we went to the 100%. Okay, let's take the S&P actually. And you see the difference. Oh my God, it's a mess in here. It's a mess. Okay, I have to take away a few things because some of them are like tentative counts, you know, and then they get invalidated. I mean, this one is correct, I think, this 5 wave down. So the point is, you see this red box is the golden zone, the 61865. I learned this from Trade Devil, credit to them. So this first wave, first of all, it retraced like 38% or something. Now, we didn't reach actually the 1-to-1 extension. And look where we are. Look where we went. Between the 50 and the 618. Now, something, this I know it by experience, but it doesn't have to be true all the time. Sometimes when you cross the 50 and you see you hover around many times, but you don't reach the 61, it might mean that it's building energy to have a push upstairs, upside, to the upside, and to crush the 61 in the next tentative. And you see here again, the S&P is kind of always different than the Dow, not different on the higher degree, but on the lower degree, it has all some difference. You see these 3 waves here? Then, in my view, you have these 3, and then you have these 3. So, of course, this can be a 5, 3, 5, and then poof, we go down. Possible. Of course it's possible. We will know next week probably, on Monday. Because if these crap down like this, again, we can still have here a 5, 3, 5, double correction, it's a mess. It never ends. But you see, that's why I was trying to say that the big mistake, in my view, that many people do is they want to have like an answer with a TA, like, this is what is going to happen. You never know for sure. You have probabilities, you have your like personal statistics on how many times you're wrong, how many times you're right. But you see, like, imagine that we are making a channel, you know? Not we. The price is making a channel. Something like this, for example. Let me change the color. I don't know. It's not very... Yes, I like this. I don't know, I mean, if it fits. Something like this, and then we go up, 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 up to break this channel, maybe to the 90 or 100%, you know? I don't know. If you enter in the right position, why do you care? I mean, imagine you enter here with, just to say a stupid number, you know, like $100, okay? Now, the 50, it's still there. You have 5 waves down, so what you do, very simple, you take this 50, not this 50, I mean this 5 wave down, and you say, if we are going down, with more probability, we are going to hit at least the 50%. Because if you want to make, what is it? If you want to make 1, 2, 3, 4, 5 down, the first wave, in general at least, it's 50%, if it's not a correction. If it's an ABC, a WXY, it can go to the 23, to the 38. But probability-wise, when you have 5 waves, at least a 50% you expected. Let's say you don't have a 50, no, sorry, I'm talking about this point, but anyway. But let's say you don't have, you don't reach the 50%, you reach at least the 38. Okay, imagine you're here. I give you a practical example. Where is the 38? Okay, I memorized it. And I put a line on it. It's around here, you see? So you buy somewhere here, example, because you counted 5 waves down. And there are systems, you know, to count them and to expect where they will finish. Plus you see this support area, you finish somewhere here. You see the bounce, or before the bounce, you see these kind of candles. There are indicators, everything. I don't want to discuss everything now. But imagine somewhere in this area you bought, and here it's your 38.2%. How much is in as a retracement? Imagine you bought in average in the middle of this circle. You go up to the 38.2, it's 1.68%, okay? And imagine here you sell 30% of what you bought here, or your position, okay? 30%. You sell it in here. So how much you have now? 70% of the position. Very good. Now with the 70%, you imagine you have, after it goes up like here, because it gapped up, you can put your stop order at break even, right? Because after a gap, I mean, you assume that it's going up a little bit at least. So now in this position, you have 70% of your, in this place, this area, you have 70% of your position open and the stop at break even. And you already made money on the 30% of the position. Now, risk-free, who cares? If you're wrong, you're wrong. If this goes down again, then you will have a 5-wave down here, and you can play the same little stupid game every time. Now, for me, it's very important to play markets that are open 24 hours. I don't know if it's possible for you. I think it depends on which country you live in. But for me, it's very important because I don't like gaps. Now you see gaps because we are on SPX in TradingView. If you go on my broker, you don't have any gap because I can trade it 24 hours. I want to go back and take away all this shit. Whatever. I'll take you one by one. So the other scenario is, instead of this channel, you have the other channel, something like this. Yeah, this should be less. And this is a very valuable option for me. It was, at least. I tell you why. Because we went up to the 50. I would suspect a retest of the 38, this level. And then maybe to the 61, and then who knows, maybe down, maybe up, whatever. But because you see now we are in a situation where if we go straight, I mean, if we want to touch the 38, we have to really go straight down, unless I drew this line in a wrong way. Let's see. Let's take the channel tool to be more precise. Some like this, maybe. Yes. So you see, we would be out of the channel, which is very possible in case this was only an ABC or a correction of any type, you know, and then boom. But again, who cares? I bought here at the 50. You see, by the way, one of the reasons I bought there, it's also because the 50%. You see this line, 50%. I don't know if it's really visible. Let me make it more visible because it's one of the very important ones. Why I have these crappy colors? I don't know. Anyway, I can increase brightness. Maybe that's why. Okay. So that 50%, it's a very strong support because you see how long time we hovered around it. Also, look at this. These are patterns which you don't really need to know so much about TA to recognize. You see, it's a flag to the upside, which is normally a bear flag, you know, because normally you have price like this, flaggish formation, and boom. but the price is coming from the downside. So normally it's a continuation pattern. In reality, we broke it to the downside, meaning that maybe it's making a complex correction or a different kind of continuation pattern, you see. Some people, they identify these as 3, 3, 5, maybe an expanded flat. I don't know, I don't really believe so much in expanded flat and strange type of flat. I like the normal type of flat, which are flag formation. So this is my rationale, you know, it's a combination of things. I say, we can go down, I don't care. I'm here, I'm from here, I bought here, I sold already 30% here. I tried to hedge, oh no, sorry, I'm wrong. I bought here. Today we went up like this, no, yesterday night we went up like this. Today we crashed temporarily. I tried to hedge this crash, but I couldn't because it broke the golden zone. And then it went up again. So 70% of the position is still open here. At this point, what I did is my new break-even, not break-even, trailing stop, it's here again. Why is it not showing? Let's say here. Okay, below this low. Of course, it can take me down if you do something like this and then continue up. I'm not saying no. But again, you go on the lower time frame, you check indicators. So it's always a game like this, you know, in my opinion. My motto is enter like a scalper and trade it like a swing trader, if you can. At least part of the position, 50, 60, 70%, whatever. I think many people get trapped because they always want a long period or definitive answer, which you cannot have in most of the case, at least. Because they say, oh, if I buy today, will it go up here? And yeah, maybe it's going up there. But what if before going up there, it do like this and then? What you do in here? Then you cry, you sell again, and then you see it going up, and then you buy again, and then it correct again. You see, this is the point. Position, it's very important. Not position in the, I said it in the wrong way. Timing, it's very important. The place and the time you buy are more important than being right or being wrong. Because yesterday, as I said, I had this, I'll show you again. I had this trend line, okay? And Fibonacci levels and everything. So, no, I didn't have this trend line actually. I had these 5 waves down. I keep getting confused thinking that I bought here, you know, because this is what happened today. I bought here. I had 5 waves down. I had some confirmation from some indicators on the lower time frame. Let's see if I can. Okay, look at this. Oh, I keep going in the wrong spot. Let me try to remember what I did, because honestly, I lost it. No. Ah, here, you see? You have a double bottom, almost. You had some other kind of Fibonacci. Now I don't remember because I do everything on the fly. And then I think I used Heiken-Ashi, which I normally use. And look at this. This is what I saw. Boom. Then first green Heiken-Ashi, I say I buy here, and I keep my stop under the double bottom. How much would I risk? If I buy, you see this doji? I love Heiken-Ashi doji, by the way. Look at this. These are the best doji you can trade, in my view. Much more than normal candles, you see? These and these. Now, I'm on the 5 minutes time frame. I will show you on another time frame. But anyway, Heiken-Ashi, doji, boom. I buy the first green after a double bottom. Risk, basically, oh, come on. 0.25%. Nothing. Nothing. You can enter, in my, no, I don't want to give trading advice. My case, you can enter with I could enter with a very big position because 0.25%, it's amazing for me. And then, boom. You see, I counted the waves. I had 5 waves in these. What happened? What is it? No, I used the RSI, not the stock RSI for this. Let's see. Oh, look at this, the divergence, by the way. Ginormous. Ginormous from here. Oh, I hate trading view. From here to here. You see the, come on, you see this bottom? And you see this? Look at this divergence. I mean, I cannot recall everything I do because I use many systems in parallel, you know. So the thinking of that moment, it's like it's difficult to grasp, but I posted when I entered, and I showed you before. So I tried to hash this one today because I thought, okay, if I'm wrong, or if it's doing a complex correction, might go to the 50 or the 61, and then boom, down. But you see here, look where is the 50, 61. See, I put it in yellow. Tack. So it crushed me. My short went away, and then I didn't want to put a short again. So I holded the position, and then I was lucky because I was right in my thinking. But look what it did. It broke this 61, 65 to create liquidity, then went down as if it was collapsing. And look on the way down what it did. No, it's not this what I'm looking for. Yes. I didn't even reach the 50. Yeah, it's the old 50%, you know. I mean, when I say the old, it means the 50% from the whole move down, from the top to the bottom of last month. So now, I don't know. We shall see. If it's this 1, 2, 3, 4, and 5, it's okay, meaning that this will maybe break the top, correct, and maybe go up again. Other option is this is a correction, and now but this is it's not 5 wave down, you see, it's a 3 wave. Come on, see, it's a 3 wave pattern with something in the middle here. So maybe it's a 3, I don't know what this it's like, I don't know, honestly I don't know, it's impossible to know. What I can say is, like, due to the situation we are in, either we collapse on Monday, either we go up in this corrective way, as I mentioned before in these 2 Twitters, or we are gonna mess around in this area for months or years. I don't know. I don't want to go back to show you why this fall was kind of predictable. I'll show you, I mean, in a very simple way, to don't go back and discuss everything once again. The main point is on the macro level. I honestly don't know if we are on wave 3 or a wave 5. So if the cycle is over, brace for impact, meaning we are declining at least from the top 61, 65%, if not 78, 95 or whatever. If the cycle is not over and we have another wave up, then this is the wave which started now. And again, in here we can have a grinding wave, breaking the top, faking everyone, boom, then down. Or we should have like a very nice massive wave to the upside. Now you say, why you say this? Let me put out the month. I go back. I know I said this already too many times, but look at this. Oop, to the top there. You see this top? Bottom. Oh, this is the SPX. I cannot use the SPX. It doesn't have history. I have to change to the Dow Jones. Yeah, one suggestion, by the way, when you count waves and stuff, use the Dow Jones because it has more history. You see, from 19, when did it start here? 1915. So I'll show you here from the bottom, which is not minus, but it was 40 something. It doesn't change so much at that level. Yeah, look at this. It's a miracle. It's magical. It's conspiracy. That's the conspiracy. 1618 exactly. Or at least almost exactly. Yes. So, because of that, and because you don't have history here before the 1915, I don't know if this is 3, 4, 5 on the lower degree, and then we have another fifth wave up. Yeah, this is not correct, but anyway, just to give you that. Or if the cycle is over and we are collapsing and you don't know, and if you find someone who tells you for sure, let me know who is him or her. So if we want to calculate wave 5 in a conservative way, not wave, we can do the same story. Boom. You see, 100, 123, 1618 can go to infinite also. 26183, but at least you have certain level, you see. So every level you check what is going on. Let me count. Let me see divergence. So imagine that it goes in this area between the 100% 1236. It's the scenario I told you as the first one. 1, 2, 3 grinding. 2, 5 collapse. Okay. Let's see if it also has an algo target. It's by the algo target is giving me, you see, this top, meaning the 1.236 extension of the first wave. So we'll see what happened. So the point is, I was trying to tell you this. People, you know, they say, oh, I want to know. It's going down, it's going up. So just give me an answer, a brief one. And then they buy, they get wrecked, or they sell, they get wrecked. And if they buy and it goes up, they get lucky. Who knows? Oh, you know, I forgot to check the. No. Is anyone watching, by the way? Yeah, still one watching. I don't know. Nobody's writing anything, so I assume. Okay, let me put my. I need to go to make myself coffee. Back in 5. Oh, doesn't show because it's in black. Oh, back in 5 minutes. Yeah, comment. You know, there is a typo. Instead of comments, I typed comments. I have this dyslexia when I type. You know, my fingers doesn't follow my brain. That's what she said. And okay, I come back in 5 minutes. Type anything if you want any special TA. Okay, I'm back. Let me take away this. Okay. Now, while I was doing my coffee, I was thinking about something that I really want to tell you, and it's this. Let me see first if my. Oh, it's everything working? Yes. The point is, what I was thinking is, even if I told you, buy here, sell there, wouldn't be worth, as I told you before, because price moves and screw you around. The most important thing in trading, in my view, is the psychology, but not the psychology as normally they teach you or they talk about in these trading videos. It's how to start. It's a complicated. Now you have different psychology concepts, right? You have, they tell you fear. Why is not greed? Oh, I cannot write with this. Why? Okay. It's not understandable fear. Ugh, come on. Anyway. Yeah, fear and greed, it's, let's say, kind of obvious, probably. The psychology is based on this. You see all this movement of prices, right? Now, what you normally think is people are buying, people are selling, people are getting greed, they get crushed because they take, some other people take profit. Yeah, I mean, there is something to it, but it's not the full story, in my opinion. In my view, how it works is you have algorithms which are not thinking machine in the way we think, but they're still thinking, of course. They have a target. Let's say this one was the target, okay? So what they do is they say, okay, during this uptrend, people were buying and they were selling, boom. And they were not necessarily, I mean, they buy and they sell all the time, like thousands of times per minute, maybe per second even. In this kind of market, imagine you have a big whale, just to make it simple. And then you have all these little dots, which is me, you, and other idiots, who try to make some money in this market, okay? When this moves, everyone either will be crushed, either will jump on it and follow it. And this, who stays in the front, will be dead. See, this red, it's the blood coming out from these circles. So the point is, even if we are like 300, 1000, small circle around the big one, we cannot change his course, This course will go. What can happen is he can fluctuate around because some little pushes, So imagine like if you're in space, and you have a space shuttle, space it's like empty, mostly. Not empty, I mean, in the real sense. Physically it's not empty, but you know what I mean. It's a vacuum, at least. So you need a little rocket, If this is the shuttle, in the example, to defy gravity and to reach the space from Earth, you need a big rocket, boom. Big engine, big rocket, massive fuel. When you're in space, above the atmosphere or at the end of the atmosphere, what they do, they drop this. They don't need it anymore. What they have is very small rockets, directional, which mostly serve to twist around and change direction, even to push the shuttle itself in space, because you don't need so much power, So this is the situation in my view. we are living in. You have this big whale that has to go from here to here. Not necessarily it's only one, of course. Maybe there are 300, 400, whatever, but the concept is the same. And then you have us, very little stupid things, push, push. And this guy, while going up, it's doing oops, oops, little right, little left. And most of the time, it's not even because this pushes, it's because he knows that there are little people there, let's say up here, waiting to buy a breakout, let's say, for example. Some people here, the red one in this case are the short, the bears, what they call. So he goes here, grab these guys and then pull them down, you know. And they got liquidated. So they are part of the big whale now, they are food. Then there are these guys, they say, finally, we got the chance for shorting. And he grabs it and goes up again. And then he's eating all the bears along with the little guys, which we call the bulls. And this whale, now instead of these, it became this big whale. So the more time passes, the whale becomes bigger and bigger and bigger and has more power. So, saying that, it's because, in my view, when you have such a big whale, it's almost, in this example at least, it's a monopolistic situation. Meaning, imagine I own all, I'm selling, I don't know which example to make, shovels, okay? I sell shovels. And we are in the golden age, right? Where everybody is looking for gold and digging for gold. And I'm a big whale selling all the shovels. And I have, let's say, 100 shovels, okay? And then there are all these little guys, and the little guys who wants to dig the gold, they need overall, altogether, 150 shovels, right? So in this case, as you say, demand is greater than offer. So this shovel, the price of the shovel will go up. Let me change color just for the sake. Go up, okay? But let's say after 10, 20 years, gold diggers become less and less and less. They become, let's say, 50. Basically, a 30% of what they were before. So my shovel that before, let's say, costed 100 should cost 33, right? But this is not happening. Why? Because I'm a whale in a monopolistic situation. So I have these 100 shovel a month, let's say, to sell to these guys. But when I see that the demand decrease, what I do? I don't sell all of them. I just put, instead of 33, sorry, this was the price. Instead of 100 every month, for 150 people, I put only 30 in my store. And these 50 guys will come and ask for these 30, and they say, oh, there is more demand than the offer, so the price will go up. So it's not 100 anymore, it's 120. Whatever. Okay? So in any situation, when you have a monopolistic situation, the demand is not really important, you see? At least it's not zero. Of course, if it's zero, this goes to crap, you know? But if it's not zero demand, I can simply decrease the offer, the output. So in the situation we are living now, today, we have many monopolistic situations. And try just reach your conclusion, you know. Price is not made by demand and offer. Another thing, you say, oh, we're going up, 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 up. And the volume is going down, 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 down. Okay? You say, you see, this is a divergence between volume. Yes, and it's useful to see and it's useful to know. But I don't know if I have a chart with volume, because SPX is not, sorry, TradingView is not providing me with volume in both the Dow Jones and SPX. Let's see if I have something else, No, I cannot find an example. Anyway, I can assure you that volume was going down during these 10 years, while SPX was going up. Meaning, how is this possible? In the way that I told you before. Demand goes down because Amazon, it's like what, 2,000, 1,500 it was a few months ago. And people say, no, I don't want to buy something, one stock for $1,500. People demand decreased. What happened? Offer decreased. Price goes up anyway. And something else. I just connect things, as they come in my mind. You remember since few times ago when everybody, even now, everybody was complaining about all this company, they're buying back their stocks, they just do to inflate the price and everything, Maybe, and I say maybe, they do it for this purpose. One of, at least also for this purpose, Meaning that if they buy their own stock, there are less stocks in the market, price keeps up anyway. Another reason is, you see what happened here, right? Boom. Now I want to change the color again, yellow. Okay, and I want to change the candle because they confuse me. Oh, why it's coming like this? Anyway, look what happened. Now, imagine you are a small company or a company have many stocks in the market for sale or for trading at least, okay? You come down here, let's say, for example, from $100, your stock become, in this case, 60, okay? Maybe in the future, 30, 40, 20, whatever, okay? Now here, in fact, you have a situation where your stock declined also because, okay, the whole market declined. That's the main reason. But now you still have, let's say, I don't know, 50% of your stock free to be traded in the market, okay? Meaning the supply of your stock is still 50% somehow. Someone can buy 50% of your stock. And if this happened, you're screwed in most of the cases, because someone else will come and buy all your stock and you lose the company. But if you bought your own stock here, years ago, whatever, first you pushed up the price. Now you have a collapse. But if you are a big company in a monopolistic situation, honestly, you don't give so much shit, You are rich anyway, the company is sustainable anyway, in decline, in any situation. But then, this is an aggregate value. You see, the Dow Jones is not the single stock. But maybe your single stock made like these, instead of these. Why? First of all, because you have less stock in the market, as I said before, because they bought them back, So they're less available in the market. And the second reason, imagine that, again, this is the average Dow Jones, but my stock did something like this. No, actually, this is not a nice way. I'll show you. Oh, come on. Okay. Imagine my stock, like Amazon or whoever, did like this in comparison to the Dow Jones, and this now. You see? I'm still at this level. So because I went so much up before, now even this turn down, keep my stop on a high price, comparing, the average of the index, and less for sale. If I'm Amazon or Google or someone, I really don't want to have all my stocks in the market in a period, especially where it can crash everything, and then someone else can come and buy a big big chunk of my company. I really don't want that. Again, this is only speculation. I'm not saying this is happening, but this is what my logic tells me. So, going back to the big whale, I'm just rambling around. The big whale, as I said, he's like, I said this in a previous stream, you know. The big whale is like, how you call it in English? Snow machine, snow truck. So what the snow truck is doing, you know, you have a road, okay, and you have some snow here, some here, some here, okay, and the snow truck will go here, poof, push the snow. Then he sees snow here, poof, poof, poof. This is how it works. He just goes around to find liquidity. So when we were here, after the crash, you see, it's like everyone is short. Oh, okay, let me go and close this short. Okay, you got the point anyway. I don't want to go too much on this. About trading psychology, this big whale moving around, he knows the psychology of people, because it's probably a software. I don't think that many whales, they actually trade manually. Of course, they give indication to the software where to go, or the main direction, or I don't know, but not in specific terms. He's kind of free to act in the way he wants, you know. And this is the big difference between the big software, the algo, and us. We have all these biases and frustration. So let's put it. It's all connected, by the way. The B stands for bias. Okay, I write one. And then you have your needs, right? And then you have fear. You have many things, in fact, of course, but everything is connected. So think about something. When you hear anyone talking about the stock market or trading, they mention the bulls and the bears. I want to change the color of this because I want to have it as different concepts. Let's put it in pink. Okay. Bulls and bears. Now, do you really think you have bulls and bears? You know, you have these, remember, these little tiny fishes going around the whale trying to eat some of the remaining of the whale food, or grabbing the whale so they don't have to swim, you know, so hard. And you think these bulls and bears, they count really anything? Did you ever ask yourself why we have this bulls and bear identification? My view, again, this is my view, personal, is that you have needs, right? Needs, okay? You have needs in life. One of the needs you have is, for example, to feel part of a society. It's a very strong need, right? I'll show you here, actually. Where is it? Well, after my coffee, you know, I was checking this. Boom. I don't know if anyone is familiar with this. This is called Maslow Pyramid of Human Needs. This is something that you normally study in economics. Look what you have. Psychological, safety, love, belonging, esteem, self-actualization. I don't completely agree with this kind of categorization, but it's okay just to have a discussion. So let's start psychological. Breathing. I don't know why this is psychological. Food, water, sex, sleep, Homeostasis, which I'm not sure in English what is it. Excretion, okay. Safety, security of body, employment, you can see by yourself, right? Look at this, friendship, family, sexual intimacy. And then when you reach the top, it's not because these are less important, it's because they are the basic. Without these you don't survive. The more you go up, you can still survive with the one on the top, but you have a shit life basically. But without the one in the bottom, you see, like water, food and stuff, you don't even survive. So it's not really importance in the way that you think about it. It's more about essentiality of those needs. So look at the top: morality, creativity, spontaneity, problem solving, lack of prejudice, acceptance of fact. Now you tell me, first of all, how many people have this? Very little. Honestly, look at yourself in the mirror and tell me how many of these you have and at which level. And I'm talking about myself also. Esteem, this is one, in my view, like one of the most important, even more than the top actually. Because you see, morality, do you have a need to be moral? I don't know if it's a need. I don't want to get long on this. Self-esteem, this is very critical in my view, because if you don't have self-esteem, you are in the tendency of suicide. If you don't have morality, you don't even think about suicide. You know what I'm saying? Maybe you feel bad, maybe you use it to make more money, maybe you trick other people, but self-esteem, in my view, it's like, boom, here, with water, food and breathing. If you don't have self-esteem, at least at some level, you know, okay? Confidence, achievement, respect of others. You see, this is all, in my view, like the green box here is the depression box. So if you don't have these, you are depressed, basically. Like friendship, family, sexual intimacy. This is, of course, it's like the basic. Now, why I'm saying this? Because look, when you trade, what happened is, if you win, okay, price goes up, you are long, you win, your self-esteem will increase. When you lose a trade, your self-esteem will go shit. And this is a big concept, you know, about losing and winning. And you know, there is a bias. How it's called again? It's called. I want to tell you in a precise way because it's very important. Just give me a second. I have it somewhere open. Oh, give me a second. Oh, I can't. No, I can't recall the name of this bias, but the concept, I can tell you the concept of it. The concept is that we don't like to lose, basically. And what happened is that many things happened in our unconscious, you know, mind. Imagine you have one good trade, right? Then what you do is you tell yourself, I had this good trade because I'm good, because I analyzed correctly the situation, I don't know, I was listening to the news or whatever, okay? But still, I'm good, you know? Then you lose a trade. Most of the time, not always, but most of the time, what will you say to yourself? Oh, I lost because this, because coronavirus, because I don't know what, because whatever. All the excuse in the world. Now you see, I showed you before. This stop was the 1.1618 of the whole move of the first wave up, even if it's a first or a third or whatever, of the big wave up that we had till 2009. So now you tell me, if I went short here and I posted, you know, this short, Now I can say, okay, I had a good technical analysis. Do my self-esteem goes up? Maybe. It shouldn't. It should be more a systematic way approach from my side, saying, okay, this analysis works, I will use it again. It's not my merit. I didn't invent anything. The fact that I used it and tested it doesn't make me a better person than anyone else. But people who were long here and they woke up in the morning with a gap and then they waited and then a gap and then they waited, then, you know, they can feel comfortable. They can sleep, you know, comfortably. Why? Because they lost in the bottom here at least 40% of their money, if not more, because maybe they bought, they sold, whatever. But, you know, they went to sleep and they say, yeah, but it's not my fault. It's because the situation. It's because the lockdown. It's because. So this is one of the very important bias, you know, that you have to stop utilizing inside your head when you trade. It's like, if it's good, it's my merit. If it's fault, if I lose, it's not my fault. And then again about what are called again about human needs. For example, you saw before, where is it again? Self-esteem, confidence, respect, family, friendship. You see all these? It's kind of social status, okay? Why do you think that market makers, or I don't know who exactly, but some big guys, they created the terminology bears and bulls? First of all, you see, as human, what you do normally, you always humanize things, you know? If you have a cat, you give it a name, you speak to your cat like if it was a person, you have objects on your desk, souvenirs, you treat them as a part of you. And you know, the big people, you know, like when I say big people, I mean not only rich people, but I mean the one that have a higher understanding, probably, than the average, at least. They know that this is one of the psychological trick, you know, to give a personality to everything. So now you have two groups, you know, you have the bulls and the bears. And then, sorry, and then you can feel a part of something because I'm a bull. And the other guy, no, I'm a bear. I'm part of this group and you are a part of this group, you know, like in football, you know. It's, you know, all these sports and stuff, it's the same psychology. You know, the Romans, when they started to have a real economical crisis in the Roman Empire, what they did, they built the Colosseum. And they organized games every week. I think at the beginning it was once a week or twice a week, and then it became every day. And the more you had games, as a frequency, I mean, so every day, the more the country and the empire was collapsing. So now you can feel a part of something. Like in crypto, I have faith. Oh my God, this I hate it. Faith. I have faith in the technology. Come on, man. How much do you know really about the technology? And even if you know a little bit about the technology, why would you think that this is the best one that you could have? How do you think that it was invented like many years ago, actually? The algorithm, in terms of, you know what is the algorithm? It's not the software itself. The algorithm is the thinking. And then the process, you know? You write down a process, that's the algorithm, where you have like if, then, else. This is how the basic instruction, you know, for an algorithm. Then you have input, output, and you put it on a paper. You write, you draw. We were used to draw parallelograms, you know, triangles and not triangles, the other, I don't know in English now. Anyway, similar to a triangle, but and in each one you have instructions, input, output, if, then, else, which are the basic, and you drew it on a paper. And it's like a process which is a graphical process. You can follow, the arrows. And then it's the way to put in graphically your idea of what should happen and what should happen in every situation. That's why you have the if. Like if this happen, then the arrow go to another parallel process or to another instruction, This is the algorithm. Then the fact that you translate it in software language, this is just because you need to input your algorithm in a machine that understand only that language. But algorithm, it's like a thinking process, like it's a thought that become a process and become a graphical representation of this. My terminology is not correct in English, but I think you know what I mean. And I lost myself. Why was it? Yeah, faith. So the algorithm about Bitcoin, related to Bitcoin, or at least the concept behind Bitcoin, it's, if I'm not mistaken, more than 30 years old. And the software, like Bitcoin itself, is now what, 2008, I think? 12 years, yeah. In 12 years, we don't have a credit card that uses Bitcoin. We had some ATM machines a few years ago, disappeared. Honestly, where can you use Bitcoin? Nowhere. What can you do with it? Nothing. Basically nothing. Do you own Bitcoin? Or most of the time you just buy it in an exchange, and it's like when you trade, for example, CFD, contract for difference, which meaning you don't really own the Bitcoin in most of the case. So I'm not saying he's not going to the moon, he's not going one day to 100,000, but the problem is here, it's faith, it's not objectiveness. This is what I'm talking about. So when you say, I have faith in the technology, like 100 years ago probably, just to say a number, most of the people, I don't want to say how many, but let's say 90% of the people were religious. Which religion? Who cares? Like depending on the country, the population, the heritage and everything. So they had faith because it's a human need to have faith in something, to hope, to try to find a solution and an answer to what you don't understand and what you can see and what you don't know, basically. This is faith. I'm not blaming people for having faith, but don't have it in the market. I mean, this is something else, You want to keep it in religion? Keep it in religion, not in the market. It's like you don't know, this is another thing that, in my view, it's missing in this Maslow pyramid. It's, how to call it, the need of knowing and understanding. I think this is one of the basic level here somewhere. I don't know where, somewhere here. People need to know. People need an answer. You can call it certainty, okay? Need of certainty, which is not exactly the same as needing, need to know, need to have knowledge, but it's maybe related anyway. So people need to know. If you don't know what you do, you go and have faith. Someone else, a book, a God, or someone told me what I don't know. And if he didn't tell me, it's because I have to have faith. Again, okay in religion, because we are talking about afterlife, we are talking other dimension, I don't know. Whatever it's your religion, whatever it's your belief. But why do you put this in the market? So, whales, no. why they pumped Bitcoin to 20,000. Then it came, I think the CME, the first one, whatever, with the future, and then, boom. You see? Very logic. And you as me and other, of course. We are the little fishes, you know, having faith in the technology. It's going down. Buy more. It's going down. Buy more. It's going down. Buy more. It's here. Sell your house to buy more. How do you know where is the bottom? You don't know. How do you know it's not going to zero? Because I have faith. You see? If I have faith, it's not going to zero. So the fact that you have this thought, it means that this is the reality. I don't know what to say. And you know what you do? Then you have the confirmation bias, right? Related to this topic. Confirmation bias. This is a point or something, whatever. And this is telling me, of course I'm sure, 100%, maybe not so much. So what I do, I go and research. I open Google and I find an article talking bad about Bitcoin or talking bad about Apple stock or whatever, you know. And then, this bullshitter, they want to scare me, you know, because they want these stocks for themselves. And I go to search another article talking about Bitcoin is going to the moon. It's going to 100,000 next month, next year, whatever. Oh yeah, this is what I should read, you know, because I'm trying to confirm what I think already. And why do I think this? Maybe, not always, but maybe because I am down 60%, 70% in my portfolio. And I have the other bias working, the one that I forgot the name, which is the fact that you don't like to lose. And if something is lost, we try to regain it anyway, even if it's impossible. Like if you lost 100,000, 1,000, whatever, those money are gone. If you make another 1,000 to replace them, you didn't get back your 1,000, you replaced them. It's another story. You see which is the bias? It's like my wife left me, so I have to go and sleep with another one. So I got back my wife. No, you replaced it. The same with money. That trade was lost. That investment was lost. And this is, it's called, you can search for it, it's called the sunk cost fallacy. It's all about market psychology, you see, but not in the way that you think sometimes, not in every way you think, maybe. You see, for example, that's why I'm saying, it's like, this is not like necessary only, like this move up, you know. It's greed. What greed? Come on, man. This price went up so jumpy. Maybe I was here, I was afraid. Maybe I was here, I was afraid. Then correction, you see? Boom. And then you say the greed is here, the fear of missing out in the last leg, for example, you know, before the other drop. Sorry. You see, when you see a chart or you have an invest, like many people who invest, they don't even see a chart, by the way. They just ask about the price and they think in a different way. For example, how they think. I know what's going on because I'm following the news. You see? Oh, this is another big bias. You remember what I said before about the need of, why I'm writing everything? Anyway, the need of knowing related to faith and stuff. Oh, I didn't make the right. Okay. The need of knowledge. I need to know. I cannot accept that I'm living a life where I'm not in control. Of course I'm in control. If I'm not in control, okay, I know what I can do. I can listen to the news, I can study, I can understand things, and then I become in control, you see? And then when you study, you listen to the news and the price goes against you, then it's not my fault. I'm in control of my life, but this happened. The virus, the what, the tsunami. I'm not, so you see, this is something that everyone is out of control. It's not only me. Of course, I mean, it's true that if you have a tsunami, probably nobody knows about it. I mean, nobody can control it. I'm not saying that. But you know, like this is the psychological process going on in your mind. Let me see if someone is, no, okay. This live stream is too dense and too long actually. It's just chatting with myself. Probably it will be only for as my notes, you know. And you know, like when you say to people like, you know, some people, they have to make this market, you know, they want to gain money, and this is not a charity structure, you know, it's not a charity company. If I'm a big whale, I want to make money over you, you know, over me, over everyone. Oh, you believe in conspiracy. So the market is not self-adjusting based on demand. Sorry, demand is up and offer which is down. No, you have conspiracy theories. Oh, come on, man. Listen, if you know anyone who works in a company as a salesperson, okay? What he's doing? He's going around promoting the best in their product and hiding the worst, right? Is this a conspiracy then? Well, if you consider this a conspiracy, yes. No, but a conspiracy is few people together conspiring about doing something that is illegal. Yeah, and this never happened in life, never happened in history. Everyone is honest. And if you are dishonest, you don't conspire. You go around and you say it. I'm dishonest. I'm trying to do something against the law, you know? So I will never conspire. Conspiracy don't exist. Come on. But now because it's labeled, you know, like the bulls and the bears, you have labels for everything. Because we are stupid little humans, like kids, you know? And we need Pinocchio, you know, with a long nose indicating lies. So we don't understand lies as a concept if we don't have a long nose. You see the point? So everything is labeled. So in the market, you go most of the time in the market not really to make money, to make a living for yourself, but to fulfill your lack of something, lack of self-confidence maybe, lack of understanding of what is going on in the world, or just because you want to feel more successful. And this is what screwed me at the beginning. It's like at the beginning I blew up 2 accounts, and I think the reason mainly was because of these biases and psychological issues, you know. I think I've rambled enough. I don't know. I understand this is not like an organized speech, you know, just talking. But I hope you find some input, you know, so you can start to think about before you trade, before you invest your money. I'm not talking about your personal life or whatever, just about your money and your trading. This is no financial advice, by the way. Do I have the disclaimer? Yes, it's there. Just in case, you know. I don't know what else to say. I had many things in mind, you know, but while you talk, you lose time on some topics, you forget others. Anyway, so the concept is, just to close the day, you don't really need to know where it's going. You see, sorry, I want to say something else. I see sometimes, you know, especially these famous, you can call them, famous YouTubers, which have 100,000, 50,000, whatever, followers. And they made, I listen, you know, I like to listen to them because I always like to doubt, you know, my technical analysis. And I noticed in the last, I don't know, probably 2 years, that many of them, I don't want to say a percentage, you know, I was trying to say a percentage, but it's not correct, you know, to generalize. But let's say many of them, they had so many wrong prediction. And I understand that, as I said before, it's not about prediction. But first of all, you have to make it clear, you know, this is not about prediction, this is about invalidation point, you know, as I told you before. Like, I have this trend line, plus I have 5 waves here, plus, plus, plus. So this point, for me, it's critical. If it goes below this, let's say, this previous low, for example, it's invalidated. Boom. If it doesn't, I hope that this is the pattern. If it's not this the pattern, we will see later on, but I take some profit straight away, so I'm even. I'm playing with the house money, you know, who cares? So I was saying this because they had always many prediction, you know, and so wrong, but not because, again, technically it's like different scenarios. So if this is not the right one, it doesn't mean I'm wrong. It means that this was a feasible scenario. This is another one. But for them, it's like even the TA, the technical analysis, in my view at least, it was really, really wrong. Maybe, I don't know if it's because they lack of TA skills. I don't know if they lack general cultural skill, or just because they didn't put enough effort, you know. I'll show you something. I'll give you an example, practical example. Look at the weekly, okay? This is what the Dow Jones, okay. For example, look at this. You have different, as usual in Elliott waves or wave analysis. You have different ways, yes, not waves, I always get confused. Different ways to count things. Like, how do you see this move? Is it a one wave? Yeah, with this retracement, which is not even 23%, maybe, of course, maybe. Not important. Look at this. I grab it with a magnet so it will be precise as much as I can, at least. Come on. Okay. And then from the bottom, you see the white line? Boom. Look where we go. You see? I put a sign here. Okay. Now, I take away the extension. So if this is the first move up, I put it here in this bottom, you see? I try to be precise as much as I can. Look at this, 1618. See? Boom. Meaning, in my view, one, two. Give me a second. I want to show you something else before I go on. Because I get things in mind, you know, like randomly. All this move. Why is not working? Okay. Let's take all this. Boom. 2618, you see? Whatever you do, it's the same story. Then 2618 from here, again from the bottom. Boom. 1236. You see, so I have a double confirmation about something. It's related to this wave or to this whole wave. You see? Now, if I take this, it's amazing, right? Because this last wave, it's 1618 of these, and it's 1.236 of these, up to the other level. So, let's try an experiment. If this is 1, 2, 3, 4, 5, for example, I want to go back and check the relation with wave 3 now. And we said, you know, again. Now, what is this wave 3 in the middle? This is the question. Look at visually. Don't look at it like technically, or how to say. Does it look as a 5 waves, or does it look as a 3 wave? If it's a 5 wave, the first one would be either these with this small top, or these alone. I don't know. Let's see. As much as I can be precise. Yes. What do I get? Nothing. No intersection. So let me move this top to the other top, and this bottom to the other bottom. Yeah, 1618. Let's see, 175 is not there. Let me put it, because it's the range, you know. Again, this I learned from Sam. Yeah, so maybe 1, 2, 3, and then all. Sorry, 1, 2, 3, 4, and the all this is a 5. Let's see. Yeah, maybe. You see? So let's give it a chance. Let's call it yes, this. So we said D 1, 2, 3, 4, because this is the lowest low, comparing these, and then 5, and then we might, the other level, the smaller level, will be without me. 1, 2, 3, 4, 5. You see? So this is one chance. Look at something else as a proportion, Fibonacci proportion. I take these, move from here to here, you see? Boom. So from wave, from the starting of wave 1 in the smaller degree, the red one, up to the wave 3, and then I project it from wave 4, and look, 1382. Yeah, we overshoot a little bit, but you see the point? And look, this other wave, 1618175. You see what I'm trying to say? It's all math. It's all mathematic. It's not fear and greed. Now, when you're here, okay, for example, or here somewhere, you know, in this area, after such a big move, right? And you have the stocks of Amazon or whatever that are thousands of dollars, and then you don't get people to buy them, you know, at that prices. So what you do, you use greed and fear of people to make them buy it. But it's not that the price is going up or down because fear of greed. The intention is to move the price up because the algo has a target there. And they use your fear or your greed to trap you there. You see the difference? One is sorry. One is saying that one is the effect of the other, and I'm saying it's the opposite. Like, the reason of the price going up is not fear or greed. The price up, it's already pre-established. And fear and greed are only tools to fulfill this agenda, program, plan, call it as you want. You see the point? To make it simple, what I see here visually is 1, 2, 3. You see, I didn't draw it. Okay, let me do it again. 1, 2, 3. Then I say 1, 2, 3. You see, these are 5. And then here, look at this. I will increase. I will magnify it. So this was the last wave, you see. And then we have this, boom, just before the collapse, which is what? Look at this. 1, 2, 3. Then I change the color later. Green, you can see, I don't know. Blue, whatever. You see? 1 zigzag, like flat correction. Why didn't I? Flat correction, boom. And then up again. Continuation pattern, up again, but it's a 3. You see? So in my view, it's all a 3 structure. That's why nobody could grab this one, could understand what it was going on. But you know, when you have a first wave starting in 3 like this, most probably, not always, you have the last wave also doing a 3 correction, you see? So for me it's a 3, 3, 3. And what if, again, I count it as a 3, 3, 3? Boom, look at this. I'm shy here of the 2, 6, 1, 8, right? Little shy. So because I'm shy there, what I do on the 5th wave, let me put it correctly, I don't go to the 100% extension of the wave 1, but I go rather to, let me take away this so you can see it. Look at this. Of course I didn't use the magnet there, but look. The green line is the 1, 2, 3, 6. To compensate maybe the fact that the 3rd wave didn't reach the 2, 6, 1, 8 exactly, between the 2, 6, 1, 8 and 2, 7, 5. So I compensate here. This is my interpretation. I don't know if it's true, of course. I don't think maybe many analysts, will bash me, when I say these kind of things. Anyway, so the point is, this one, in my view, is a kind of 3-wave-ish, okay? Meaning, just to make the story short, meaning this is an ending of something. Now, if it's the end of the whole cycle, I don't know. If not, this should be the end of a 3rd wave, large 3rd wave. 1, 2, 3, 4, 5, something like this. I mean, I don't want to be precise. See? Something like this. So this is the last wave, is the 5th of the 3rd. If this is true, we are missing the 5th. The 5th of the 5th. Of the 5, sorry. The 5th of the 5. We don't know. I don't know. I mean, maybe someone knows. I don't know. The only way is to try to understand this correction. Some people, where is it again? Some people call this 3 as A, B, C. Some people call it 5. I don't know. 1, 2, here it was, I think, 3, 4, 5, and you cannot see, give me a second. Cycle again. You see? How do you know? You know, one thing I know is this one, sorry, again, this wave, it's really, everything is so overlapping, you see? Boom, boom, boom. And in my view, as here we had cell, 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 with a low volume going up. In here, we had the opposite. Buy, 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 buy. Not in this first one, you see, but in here, buy, buy, buy. So I was expecting a bounce, and you say, where do you expect it? I'll show you. Little magic. Now, if you consider this wave, which in my opinion is, so if we have another wave up, is not related to this degree, so it's not related to this, the 5th wave. If we have, if we have another wave up, some people say you have like 1, 2, it's all a 3, whatever, these are 4 and a 5. So this 5th, if we have it, and I don't know, nobody knows, probably, except the whales. Anyway, this 5th is not related to this. That's my opinion. And you say, hey, who cares? You have a 5th. No, it's important, because when you relate waves with Fibonacci, with other tools, then it's very important to know to which one is related. You see? Oh, come on. So look where we go. Just before the 50%. So let's mark the 50% there, okay, of this last wave. Why do I measure this? Because, as I told you, I consider this wave over in this degree. So I measure all of it. if people say, okay, you have another one related to this degree, then how do you measure the retracement? You go up here, where if you think that you have 1, 2, 3, where do you start? The 2 here, the 3, sorry, here, here, I don't know. But because for me this is over, I can measure the fib of the whole wave. Okay, again, this is this line is the 50%, and then I put you the 61 and 65 golden box, okay, here, just right on support, you see, very nice. Now what I do, the other option for me is the whole cycle is over, so I measure everything, okay, and look what we have here, the 38.2, right? And the point is, this bounce we had, it's actually on the 38.2 of the whole cycle, and not on the 50%. It didn't reach the 50% of this wave, last wave up. So this was scared me, because it's like, if we are responding to the whole move, let me put it back, yeah. Look, it even pierced it, you know, but didn't reach the 50. Of course, a front run on the 50, it's common, you know, you can have it. But still, you know, I have to work on probabilities on what I see without having faith or anything, as I mentioned before. So what I see objectively is we pierced the 38.2 of the whole move, and we didn't reach the 50 of the last wave. In here, if you go on my Twitters and you search, oh, someone wrote me a message. Are you still there, by the way? Thank you for the nice comment. Sorry, I didn't see your message, you know. Are you still there? I don't know, maybe not. Other electrician, okay, good. So, where I was, I forgot. Anyway, you see, this is what is happening now. Oh, yeah, still here, good. That's nice to receive a comment like this. So I imagine that you are there since 20 minutes or something, not before. I was rambling around the market psychology or whatever, personal psychology. I think it's useful to, but it's a very long stream, so I don't know if you have the patience to listen to it. Anyway, and look at this, the 50% of the whole move, it's above this support and below this, you see? So, I mean, it's very difficult to say. If we have another wave up, because the Fibonacci, like I give you a practical example. Imagine this wave will go like this, okay? And then what you will do, if you say, okay, this cycle it's over, you will take the Fibonacci from the beginning, inception, to the top, and do like this. And what you should see is that the shifted Fibonacci, which you will use in the future, it should have a relation with the pivot point and the support of resistance that you have here. And look, for example, now let me take away this orange line because we don't need it and it's confusing me. Imagine I do something like this. Let me try, let me make some test. Okay. Yeah, like this, okay? So imagine we go up in the future. We go to, what is it, 37,407. I'll mark it down for later, if I remove the Fibonacci so I have it there. And we say, look in the past, you know, what happened. The price was going up, and it bounced at the 61, 65%. It bounced at the 50, meaning it bounced here actually, and then it found support at the 50. It crashed the, you know, it's like, what I'm trying to say, it's like when the price goes up, it will, yeah, the whole video, it's, yeah, probably but I don't know. I don't know if you really have the patience. And there is also a 5 minutes break time because I went to prepare a coffee, so you will have 5 minutes. But I posted a picture with a spelling mistake, by the way, because I made it in a hurry. Where I say 5 minutes away, I make just type something. So we'll have it's written on the screen basically when the break is it's happening, so you can skip the part, you know. So I was trying to say that the price respect the future Fibonacci basically, because it's everything about mathematics and computers, you know. So if I put it back here, you see even now it's respecting somehow, you know. This is a minus 22. Let me put it right so we can have like a real life example, which is 45, is something like that. The starting. Look at this. We came up, rejected from the 61, back down, crashed the 61, back down, support of the 78.6, which is the future 78.6, because when you're here, your price is here. Of course, you don't know what is going to happen. Look at the 50. Oh, the 50 is not really a Fibonacci number, the 50, by the way. I don't know if you know it. It's not a Fibonacci. It's useful in trading because many algorithms, you know, react to the 50%, but it's not a Fibonacci. And look at here, it come to the 38, rejected, up again, and then to target. But look at here also. Look at this cluster here. Boom, rejection from the 114, coming back, support going, I mean, it crashed it a little bit, but still it pierced it, the 236. You see what I'm saying? It's like many times I use this system to also get some ideas on what can happen in the future, you know. Let's see if we can do it now, actually. I'll put 1 hour chart. Okay. By the way, this is, oh yeah. On a small time level, it's more difficult. On the high time frame, it's easier. So let's say we went up here, right? Look at this. There is nothing that shows me any relation to the Fibonacci number. Let's start to move it. What if I do this? Huh? This is better, for example. Oops. Yeah, maybe this is better. Look at this, for example. I don't say that this is what is happening, but we go up, boom, crashed on the 65. We go up, maybe it's not the right point, wait a second. 61 maybe we should put. 61, it would be below the actual top, so it's not useful actually. Let's put it in this way. Because we have, you see, maybe a little lower. 61, 65, resistance. Go up, 38, resistance. Oh, come on. Okay, then coming back from the 38, the 50 is resistance, 61 is support. We go up, we go around the 236, resistance at the 114, resistance at the 114, support, you see? So maybe, I say maybe, this is a level where if we go there, we will have some resistance, the yellow one. See, this bar that I just put now. Or if we go even more, even upper, let's see. I have to reduce. I have endless patience and I trade learner around. Oh, that's good. That's good. I do the same. I spend so many hours, you know, in this in this activity, and I love studying chart. And I always, my main struggle in life, in trading life, was that my execution is always below my level of analysis. That's my. I think you maybe follow me on Twitter probably, because otherwise how would you know that I'm here? Okay, I wanted to study another situation. Let's see if it's going even more. Oh, look at this. Yeah, for example, this would be perfect. Not perfect, of course, but yeah. Here, interaction with the 6165, under the 6165 exactly. You see the gap in here, by the way? Let me take away this drawing so you can see better. Look at the gap. Gap going down, gap going up. You see? Look. Boom. Perfect. Look at this. Price coming up. Stop exactly at the zero, at the future 09, which is also the 0887 Fibonacci wise, but I put the 09 because I use it for flat correction, which is very close to 887. Look at the gap. Perfect. Oh, look at the gap here. Of the 50. Boom. Wow, that's amazing actually. Let me take away the price line because it's disturbing me. Oh, where is it? I forgot this one. Okay. Look at this support. Oh, this is amazing. Actually, I might have found my answer. Look at this. Look at this. This is the might be the future 38.2 or 236. So let me do something else. Since we discovered this right now, where is it? I want to take this one, this Fibonacci. Do I need it? Yes. Visibility, I want to reduce the visibility from, I don't want to sit in the wicks, because the thing that we were doing before now can be related, and I want to see if the chart of Dow Jones reacts more to the, what is called, the 23.6 or the 38.2, roughly. I don't need precisely. 114, 38.2. Okay. The 38 is resistance, 114 is resistance, 236 is support coming down. Okay. Let's go back to the low time frame. So we said 38.2 resistance, 114 resistance, and this support. So the assumption is resistance, crash to the 114 resistance, back here support. In this case, my scenario is we're going to 27,700. Let's see. I'll mark it down. What does this represent for us? I'm just doing this on the fly, you know. I'm not, I didn't prepare anything, to be honest, because I see the chart all the day and I got bored. But this one, there is some kind. Ah, look at this, by the way, I didn't notice. It's almost a double top, you see? And here, I can enlarge. You see this gap? Oh, okay, this gap is still there, but at least temporary, you know? This is a gap. And this is the 78.6 Fibonacci. I don't know if you can see it, it's too dark maybe. Let me change it. Style 78.6. Where are you, bastard? Still, maybe, yeah, whatever. So you see, there is some kind of relation, and this would be 1, 2, 3. What will be this? 1, 2, 3. This is a correction, and then a 5 up. Maybe, I don't know. Maybe it can go down here and then go up again. By the way, so we will have to move again. But look, even here. Oh, come on, man! Look. 38.2. 23.6, as we said, it's support. 50, boom, boom, boom. Yes, I think that there is a chance, because if we topped here, as I said, you see, I don't see any fib relation. It's not responding to the fibs, you know, so it's very difficult for me to think that we topped here. Maybe we correct and we go up again, but to this one to be the final top, I have this scenario. I show you. I don't know. You were not online probably when I showed before, so I'll try to find it again. Yes. Wait a second. Yeah. Where is it? Where is it? No. I go to profile. I'm not a big tech guy, as you can see. So this one, where do I show you in a better way? Oh, this is my entry of yesterday, but you're watching the other. You see? This is one of the projection, you know, that I have. And these, you see, the Fibonacci lines are the lines from the top to the recent bottom. And this is my entry yesterday, you see. I imagined a channel here that doesn't exist yet. But yeah, for some other calculation reason, I said, okay, I buy here, I risk in the low time frame 0.24%, which is nothing for a trade, at least for me. And if I'm right, you see, boom, I have a good chances, at least to the 61, 65 here, where I can take some profit. Oh no, yeah, it was here, yes. Now the price is here, actually, somewhere here. So today I took 30% off, and now I'm playing with the house money, basically. So who cares? But I think that, you know, we crashed the 50, we didn't reach the 61%. So we are not responding to, you know, to these levels actually so much. Well, to the 38.2, yes. To the 50, no. Which again is not a Fibonacci, so not every algo or every chart really cares about it. But then normally what I do, you know, is when I see the first leg up to the 38, I imagine, how to say, statistically, I think we should go at least to the 61.8. This is my normal, if the retracement is not a big retracement, because of course if you have a retracement low down here to the 90%, for example, then probably it's a flat correction. If it's a correction, it's not a first wave. So if it's a flat correction, you go to the 90, and then you extend this first wave 100 or maximum 138%. And this is as a textbook, you know, then can be also 1.5%, 150%. But the other scenario I wanted to show you, since you're here, yeah, the other is this one, basically, where from yesterday we would have, we go down, you see, here and then up. But then I thought, you know, I decided to buy in here, where we were, and not waiting this retest, first of all, because I don't know if it's going there, but also because, you see, it's like twice here, then retested. So why should go back and retest it while the price already crashed the 50% and reached actually between the 50 and the 61, and here it was already tested, you know. So it's like this is I don't know if you can follow me, but you see this is like a head and shoulder formation, kind of. And many times they don't become real head and shoulder, breaking the headline, the neckline, many times. So I decided, as I told you, 0.23% is nothing as a risk. Yep. So this is one scenario, see? So maybe we are going here. I'm not saying we will, because anyway I go back to the lower time frame and check everything and count the waves. But you know, as a general view, it's useful for me. That's what I want to say. in that scenario, let me see it again, and I'll show you again in parallel. In this scenario, 27, the first, you see this leg up that I imagined? The double top, basically. Yeah, and look, see? You see what I mean? Like this yellow one, yellow, blue, yellow, green, blue. And you see it's creating a channel. So what I do is I consider, again, hypothetically, because I don't know what will happen, but hypothetically the best way to understand it is like to consider parity of wave, meaning the same length. So I said, okay, this is the first leg up with a small retracement. It's not a deep one. Yellow, because this one it's, in my view, another way disconnected from these, because the shape of it and blah, blah, blah. And then I said, okay, if this yellow happened, if this blue is over, as I thought it was, then we should have another yellow. So I just took the same length, you see, of this one and projected, and look where we go. And then you have these, and then you have the double top. Possibly, of course. Maybe we finish here, you know, because we have maybe like, this is, it's a mess to understand. It looks like a 5 wave, but it can be a WXY, whatever. But anyway, if we have these, and up here, maybe correction is over here. And then collapse or shoulder up. You see this? It will be a big head and shoulder. But my point is now that you see this projection show me that we are going here. Double topping this pivot point exactly as unconsciously, because, not exactly, yes. You see? No, I mean, where did we? Yeah, you see? Yes. This one, as we said, rejected here, support here, 786, double top here. So maybe this is another kind of confirmation. It's not confirmation really, but it's like another confluence of analysis, you know. I like to play with the Fibonacci on the other side. So you also trading? You want to tell me a little bit about what you trade and since how long? So I just stand up and take a glass of water because I really need it. If you're still there, I hope you're still there. Would be nice if you tell me if you're not there anymore, like before you go. Not if you're not there, you cannot say, but before you go. So at least I know that I'm talking by myself. Which one it was? Yeah, this. Here. Yeah, it looks like 2 watching, so. 1.5 here, good, good. Mainly, yeah, it's like crypto, it's normal. Many people start with crypto, you know, because it's like easy access. Now, you see, when they made easy the access to trading crypto, crypto collapsed. So that's what I was trying to say, you know, about market psychology. And they say, hey, the 5th wave, it's because everybody's FOMOing in, you know, they want to. Yes, of course, but how? Why? Something has, like, in a normal situation, it's like nothing has changed. People are FOMOing, they come and they buy, right? This is the concept they tell you, but it's not like this. It's like people, yeah, everybody's FOMOing because they see something from $2 to 20,000, you know. But the concept is, when they want a 5th wave and they know that is very difficult because everything is so extended, who bought already bought, right? Nobody buy anymore. I mean, if you already bought and sold at high prices, you know, you don't take the risk anymore. If you're at least, I don't want to say a trader, you know, but if you have some knowledge of trading, you don't do it. So what they do, as they did in crypto, they started to open exchange everywhere. To sign up, it's so easy. You can pay with the debit card, credit card. So they create the 5th wave. You know what I'm saying? Of course, they use the psychology of people because we are idiots, you know, and we are always in late. Sorry, my throat. But it's manipulated, you know. It's not a normal market, offer, demand, blah, 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 blah. It doesn't work like this. Yeah, you know. Okay, please, can you give me just 30 seconds? Really, I need to go to take some water. I cannot, it's too dry. I'm coming back. Okay, can you hear me? Because I just crushed my mic. It fell down. It was on mute. It fell down, and I don't know now if it's working. Can you please give me confirmation that it's working?